Hello, welcome back to this Module 5, Rules and Regulations for Financial Advisory Services. Yesterday, I believe we stopped at paragraph 12. That is the valuation of units in the ILP subfund. Right. Now, if you look at paragraph 12 of this particular segment, the notice here this notice here gives you the methods how you can evaluate the units. So as stated there clearly, the units of the ILP subfund shall be issued, redeemed or repurchased at a price arrived at. Now this is the formula by dividing the NAV, the net asset value of the ILP subfund, by the number of units outstanding. Then the price of the units may be adjusted by adding or subtracting, as the case may be, any fees or any charges. Right? This is in accordance to or in compliance with the fees and charges as disclosed in the product summary of the ILP. Then paragraph 13 says that paragraph 12, the evaluation of the units does not apply for the initial offer period of the ILP subfund. Right, so after the offer, after the initial offer, then paragraph 12 will apply. And paragraph 14 talks about the maturity of the capital guaranteed ILP subfund, and the unit shall be redeemed at a price equal to the guaranteed amount or the NAV of the ILP subfunds divided by the number of units outstanding, whichever is higher. So here it just gives you they give you some clear guidelines, clear specification as to how the units of the ILP subfunds are being evaluated. Right? This is just arithmetic, so it's pretty simple. Now then the next segment is audit of ILP subfunds, and this runs from paragraph 15 all the way to paragraph 22. Now here you will notice that the notice says that you need an external auditor, right? So you need an external auditor to carry out an audit annually, right? So this is very specific. So there must be an annual audit by an external auditor using one of the following methods. All right. The first method under paragraph 15A is to audit on the financial statements of each ILP subfund. This is audit by way of the first method. All right. So the first method means auditing on the financial statements. Now this is a quantitative measurement. A quantitative measurement, right? You're looking at the financial statements. Now the notice also provides for an alternative, which is audit on the internal control and processes of the ILP subfund. Right? This is known as audit by way of the second method. Right? Just to recap, two methods. One is by way of financial statements. The second method is by way of the internal controls and processes. And you need an external auditor to conduct the audit by either one of the two methods. Now then, of course, there are certain specifications as well, certain requirements as well. Now, if there's any changes, the insurer shall notify the authority in writing before the first change from carrying out an audit by way of the first method to an audit by way of the second method. Now you will recall the audit by the first method is the financial statements, and the second method is in relation to the internal control and processes. So if there's a change, then you need to notify the MAS accordingly. Right? Paragraph 7 to 18, 19 is similar, right? So upon the change of an audit by way of the second method, right, so again you need to inform the MAS accordingly. Right? And paragraph 18 says that when the audit is carried out by way of the second method, meaning internal processes, and controls, the insurer should ensure that the inaugural audit, underline the word inaugural audit, is completed not later than 3 months after the ILP sub-fund's year end. Right? So you need to be careful about the timing as well. Alright? In terms of the auditing of ILP sub-funds. Right? And paragraph 19 and 20 are to be read together. So subject to paragraph 20, upon completion of this inaugural audit, the insurer should ensure that every subsequent audit by way of the second method is completed not later than the next financial year end of the insurer. Now the second method is qualitative. Right? We are looking at the control and processes. So therefore there are certain requirements for the insurer to make sure that the internal control and processes are up to date. And that is why they give you a timeline of not later than the next financial year end of the insurer. Alright, and paragraph 20 is to be read with paragraph 19, and it says that when the immediate financial year end of the insurer after the completion of the inaugural audit is no more than 12 months, right? Pause there for a little while. Not more than 12 months from the date of the ILP sub-fund's year end, for which the inaugural audit was based on. If that be the case, then the insurer should ensure that the audit by way of the second method is carried out by the following financial year end of the insurer. Right? So you can take your time to digest the timeline in terms of the change of the audit, right, by way of the second method. Then 21 gives you a further requirement. The period under review of an audit by way of the second method shall be for a period of not less than 12 months. So the second method, the internal controls and processes will be updated. And paragraph 22 in particular talks about the objectives, right? So if you are doing the audit by the external auditor by way of the second method, then the insurer shall ensure that an audit report is prepared, which includes the following objectives. So A, B, C, D, E. Right? So those are the objectives that must be complied with in the audit report. Right? So just an example, right? Take B across the page. Units of the ILP sub-funds are properly priced. Right? The second method is internal and control and process, right? As you know, so it's not quantitative. So in the audit report, the objective is you make sure that the units of the ILP sub-funds are properly priced. All right. C talks about charges and expenses directly attributed to each ILP sub-fund are properly accounted for in the correct period and allocated to the correct ILP sub-funds, while common expenses are properly apportioned amongst the ILP sub-funds. Right? I need to repeat that this is control and processes, so they still need to look at the quantitative aspects of the audit. Right? You'll notice that A, B, C, D, E relate to quantitative matters. Right? And D say existing assets and liabilities are properly accrued for each ILP sub-fund, and E, assets and liabilities of the ILP sub-funds are properly valued in accordance with consistent accounting policies applied to all ILP sub-funds by the insurer. Right? So again, you can see that if the financial advisor or the insurer, sorry, in this case the insurer is to use the second method, then you need to put in the quantitative aspects as well. Okay? So that's very quickly in regard to the audit of ILP sub-funds. Now moving on, we now look at the audit certificate relating to ILP sub-funds which are terminated or matured. Alright, so this notice provides for such issuance of an audit certificate. Alright, so again, similarly, if the ILP sub-fund is terminated or matured, then the insurer must appoint an external auditor as well to prepare an audit certificate, certifying that it has not come to the auditor's notice through the course of audit regarding matters set out under 23A, B, and C. Right? The key things are the insurers have failed to realize all the assets of the ILP subfund as at the date of termination or the maturity of the subfund. Right? So when a subfund is terminated or matured, the proceeds, all the assets must be fully realized for distribution at least, right? You should not have any assets that are unrealized, right? Because the ILP subfund either matures or has been terminated. Right, that's 23A. Now B, similar, insurer has failed to distribute all resultant proceeds. All right, this should not be the case because it has been terminated or matured. So proceeds must be distributed accordingly. Net of outstanding liabilities to policyholders in the same proportion as their holdings in the ILP subfunds. All right, there should be fair distribution in accordance with the units that are held by the respective policy holders. So the external auditor must certify that, right? All the assets have been realized and all the net sales proceeds have been distributed accordingly. And C, insurer has failed to comply with any of the requirements as set out in the notice in relation to the ILP subfund from the date immediately after the period of the latest completed audit to the date of termination or maturity, right? Or in terms of maturity or termination, the final distribution to the policyholders. So the external auditor has an important task to provide the audit certificate. Right? And of course, there's a timeline to it at paragraph 24. All right, so the insurer must ensure that the audit certificate is completed within 6 months. So there's a timeline there within 6 months after the termination or maturity of the subfund. All right, external auditor cannot take its own sweet time, and the insurers must ensure. Right, so the word is sure, ensure that all the audit certificate is ready and properly prepared within 6 months after the date of termination or maturity. Then there's also a further requirement at paragraph 25 that the insurer shall send to the MAS a copy of the audit certificate, right, within 30 days after the termination of the audit, after the completion of the audit. So once the audit has been completed, all right, you say goodbye, thank you very much to the external auditor, and then you need to submit the audit certificate within 30 days, right, after the external auditor has completed its work. Right? So these are some of the requirements. And lastly, at paragraph 26, and this copy of the audit certificate shall be retained for a period of 5 years after the date of termination of the maturity of the subfund. Right? So after the termination or the maturity of the subfund, then, and the audit certificate has been properly done, submitted to the MAS within 30 days after completion, then this audit certificate must be properly kept for a period of 5 years, right, from the date of termination or maturity. Right? And paragraph 27 refers to the insurer's responsibility to make available this audit certificate to the policy holder. Right? So if a policy holder should ask for it, then you should be able to furnish, the insurer should be able to furnish this audit certificate to the policy holder within 30 days. Right? So if I'm a policy holder and I want to have a copy of the certificate, I ask for it, and therefore you should give it to me within 30 days, make available. So that I can take, as a policy holder, I can take a look at it and make sure that that I'm satisfied, I'm happy, all right, that the insurer has done all that is required to be done under this particular notice. Right? In particular, reference to paragraph 23, A to C. Right? All right. So yeah, and of course, this request must be made within the 5 years from the date of termination or maturity. Right? The insurer is required to keep the audit certificate for 5 years. So the policyholder must make that request within that 5 years. All right? And once a request is made, then you need to make available to the policyholder within 30 days. Right? Now that relates and refers to the importance of the external auditor, all right, in relation to auditing the IRP sub-fund and in terms of preparing the audit certificate. Right? Now then let's look at the next segment, which is disclosure. Now this one is similar to what we have discussed over the past chapters. In terms of disclosure, the guiding principles are unchanged. All right, whatever you disclose to the insurer disclose to the client, or whatever information that the insurer provides to the client about the IRP or the IRP sub-fund, it must be clear, adequate, all right, not false, not misleading. Now those are the general disclosure principles that goes across this particular module, all right, under the rules and regulations for financial advisory services, right? So I do not wish to belabor that point, but just to make sure you look at paragraph 29. All right, if there's any significant change to the IRP or IRP sub-fund, right, change in manager or focus, objective, approach, and some of the other significant changes that we have seen earlier in this particular notice, then you must inform the shareholders. Insurers must inform the existing shareholders not later than 1 month before the change is to take effect. Right? So this again one of the disclosure principles. You need to update the client of any significant changes, right, before the change takes effect, not later than 1 month. All right? So as soon as you see the changes, so you have to inform the client or the policyholder accordingly. All right? Paragraph 30 is similar, so clear language, no jargon, and if you cannot avoid using a jargon, then try to explain it as clearly as possible to the policyholder or to the potential client, as the case may be in the past. Right? Then paragraph 31 is a point to note. An insurer shall not market any IRP or IRP sub-fund with any sales material, including any product summary, product highlight sheet, or brochure. Now underline this point, containing information which has not been updated within the 12 months prior to such marketing. Right? Apart from the general disclosure standards of clear, adequate, not false, not misleading, in relation to the IRP and IRP sub-fund, there's this further requirement that your information must be up to date. Right? So if your information has not been updated within the 12 months prior to marketing, then you shall not use such materials, right, because it is outdated. Right? Then below there, they talk about product summary, policy, and product highlight sheets. And here they give you further details. The insurer issuing an IRP shall ensure, right? They use the word ensure. Shall is already very strong. Ensure is even stronger. So used together, that means it is mandatory, it's compulsory. The information specified in Appendix A and the annexes to Appendix A is disclosed in the product summary. Right? So they want to make sure that you give sufficient, adequate information to the client. All right, so they set out in Appendix A the information specifically that must be disclosed. Right. So I pause a little while here. You may take some time to look at Appendix A. If you look at Appendix A, let's take a look at Appendix A. Right, I hope you're with me on Appendix A. Right. So you look at the list of appendices under MAS 307, all right, there are 8 appendices there. Appendix A is information to be disclosed in the product summary. Appendix B, information to be disclosed in the policy. Appendix C, Appendix D, E, F, G, H. All right, if you cast your eye down the page there at paragraph 3.3, all right, you'll find the list of appendices under this particular notice 307. All right, and then look at the note just below that. We have enclosed the following appendices and annexes under MAS 307. Now there's a AD there just across the page, and you will see the additional disclosure requirements for index ILP subfund. Right, the insurer shall disclose the following in the product summary of an index ILP subfund. Then you can see down there A all the way to G, right? The guidance, and then H, and all the way down to J. Right? So that is the information that is required to be disclosed in terms of product summary. Right? Just take some time to cast your eye down the page, and you will see the additional disclosure requirements. Now, if you turn to the next page, it goes all the way to O. Right? Since we're on this particular page, so let's now turn to the next one, Appendix F. All right, you'll see information to be disclosed in advertisements and publications. Right? Again, if you cast your eye down the page, you will see the information shall not be false or misleading, and paragraph 1 and 2 there. All right. And particularly, I read to you too, no insurer shall, whether by the prominence given to specific information or otherwise, creates in an advertisement or publication in relation to an ILP or ILP subfund false misleading impression as to the ILP or ILP subfund in question. Right? Right. They also provide information to be disclosed in terms of the contents of the advertisement. Right. So this they actually define for you what you can or what you cannot do in your product information disclosure. Right? Now, I've just turned the page so as to save some time rather than flip back and forth. Then you look at paragraph 4 in the appendix there, the headings past performance of the ILP subfund. Right? Right? Again, I do not wish to belabor the point, and you can take a look at that. Right? So especially A, 4A, includes a prominent statement that the past performance of the ILP subfund is not necessarily indicative of the future performance of the ILP subfund. Right? They do not want false or misleading content in the advertisement. Right? So the insurer cannot place heavy emphasis on the past performance. Right? Yeah, you can as a marketing mechanism, as a marketing tool, you can talk about past performance of ILP subfund, but then you need to prominently inform the client that to say, hey, look, the past performance is not necessarily indicative of the future performance. All right, anything in the future is a question mark. All right, depends on market conditions. Right? For example, in the present day COVID situation, right? So one cannot expect some of these unforeseen circumstances. All right, political changes, economic changes, natural catastrophes. Right. So therefore, you cannot emphasize too much on the past performance to say that, hey, look, we did very well, therefore we are going to do very well moving forward 5 years, 3 years, 10 years down the road. Right. So otherwise, that may be interpreted as false or in any way misleading, right? Right. So, so that's the position. I mean, those of you who are in the insurance business would know about the critical year period, right, of the life insurance or some insurance policy, the critical year period, and that became an issue some years down the road. All right, where the earnings from the policy were not sufficient to continue to pay the premiums, right? So that is something that in the future, so that needs to be emphasized to you as well. All right. Now 4B, if the insurer wishes to state the return on the ILP sub-fund, then there must be a clear basis how the returns are calculated. All right, setting up the assumptions, right? So the key thing here is the assumptions. All right, you want to predict, forecast a return, then you need to have a statement to clearly set out the basis, all right? And set out all the assumptions that you use for you to calculate that basis. In any event, the guideline says that one should not use words like targeted, expected, projected, forecast, right? But sometimes insurers do that. They do use such words, all right, as expected return, forecast, predictions, and words like that. And in which case you need to set out the assumptions, right? And then gives the basis upon which the projected return or the targeted return are being calculated. Okay. Right. C is the same thing. So where dividends have been declared in the past or distributions have been made by the ILP sub-fund, when I state the returns on the ILP sub-fund, calculate on the assumption that all dividends and distributions are reinvested, right? Taking into account all charges which have been payable upon such reinvestment, and includes a statement that the return is calculated on this basis. So you can see for yourself, it's all very quantitative, right? And all these are precautionary statements or warnings, right? So that the customer has the basis to make an informed decision, right? And D even provides you with the period, right? Presents a return on the ILP sub-fund in relation to a period of not less than 1 year. Right? Except that in the case of an ILP sub-fund that has been constituted for less than 12 months, presents a return on the ILP sub-fund in relation to the period commencing from the inception of the ILP sub-fund. Right? So there are a lot of details there, which I think you need some time to plow through. All right. If you look at E and F, you see they even give you the day upon which you need to perform those functions there, right? In terms of presenting a return on the ILP sub-fund. Yeah. And paragraph 5, right? There is also a provision there in terms of investing at least 90% of the funds in another collective investment scheme. Right? So therefore, I again do not wish to belabor this particular point in terms of what can be said or what cannot be said if the insurer wants to talk about the past performance of an ILP sub-fund in order to market the present ILP sub-fund. Right? Now, if you turn the page, similarly, it's the same issue, comparison of past performance of ILP sub-fund with that of another collective investment scheme. Right? So if you're comparing the past performance ILP with another collective scheme or an ILP sub-fund or an index. So the comparison can be made based on another CIS, an ILP sub-fund or an index. Now, if the insurer wishes to do that, then it must comply with paragraphs 10 to 13. Right? So just take some time, cast your eye down the page and do a quick read. Right? Or you can do that a bit later at your own time. In terms of what the insurer shall do or shall not do, right? When making comparisons. So to put the matter simply, you cannot simply compare, all right, and say, well, this is better than the other one, CIS or an index or whatever. Right? You cannot simply do that. You must follow, you must comply with the requirements set out under this particular segment, right, in terms of comparing past performance. Right? And very quickly you move to the next segment there, next heading there. Comparison of past performance of IPR sub-fund with that of another form of investment.